I would like to tell everyone that if you want to do something, just do it. A lot of people sit there and think about doing something, but taking that step of just going out and doing it is really important. I would tell any budding entrepreneur, VC, anyone that if you want that future for yourself, go out and do it. You should write about your opinions. You should share your opinions. You should have a seat at the table. And like anything that you have a passion for, you should go and seek out mentors and people. And what I've realized is that everything in life, whether you're an entrepreneur or whether you're trying to build your personal life, it's all about the people that you come across.
Welcome to Venture Ahead, iUniversity's Entrepreneurship Podcast. I am Valeria, a BBA student at IE, and I'll be your host in this episode. We're very excited that we have with us today Videesha Boeckle. She's a general partner at Altitude VC, and she'll be helping us in breaking down every step in her life as an investor in venture capital. So Videesha, we know that you have a passion for entrepreneurship. That's why you're an investor. You invest in B2B technology, and also you help to build small ventures around the world.
I am a general partner at Altitude, and Altitude is an early stage fund that is investing in SME tech. So we're Europe's first fund that is backing technology solutions that help small and medium-sized enterprises become more productive, efficient, and purposeful. So we typically do checks between 100K and €1 million. And myself, I've been a VC since 2012, and that's when I originally started investing, mainly for a fund called Pro-Founders Capital, and then I moved to Berlin in 2013 and spent 9 years in Berlin, actually, in the venture capital and tech ecosystem there before moving back to London 1.5 years ago now.
Thank you very much. So we're going to start with the same question that we ask all of our guests here in the podcast. What motivates you to wake up in the morning?
That's a really good question. I think the thing that motivates me the most is just I'm a very intellectually curious person, and I get a lot of energy from talking to a lot of people. And so I can't be by myself most of the time. I like to be surrounded by people. So what motivates me is just getting out in the world and hearing people's stories, hearing what people want to achieve, and just trying to support them in any way I can.
And where does your passion in entrepreneurship comes from?
That's also a really good question. So I grew up in an entrepreneurial family, and my dad became an entrepreneur when he was quite late. Actually, he was 47 years old, and I just saw him take that risk. And I'd always wanted to build things. I quite like building things. I do that in my personal life. We do a lot of kind of property renovation, so I like seeing things that are really old and don't look that good and then turning them into something magical or new. And so I think entrepreneurship is really that, right? You often start with nothing and then you're building it and you're making something really amazing from nothing. And that journey of kind of the underdog is something that really inspires me, but also that motivates me to be in this segment.
So between an entrepreneur and an investor, which one do you say comes first?
That's a really good trajectory when I think about my own life. I think that I thought I would be an entrepreneur. I thought that I would, in the traditional sense, that I would build a tech company. And I kind of am, because I've helped to build 2 funds previously, and obviously on this fund that we are with Altitude, with my co-founders, I'm one of the founding GPs. And so building a fund is kind of akin to building a company. So I would say the entrepreneur in me comes first, and I think that helps me become a better investor.
Because you're already aware with all what's going on, like inside of the industry, you have the knowledge.
Correct, and I think something else happens when you build things. You don't take things for granted. You have a huge amount of humility. You ask a lot of questions because you know that you don't have anything to start with. And you're just always curious. And I think that's also what makes great entrepreneurs. So that would be my answer.
One thing that I heard once is be humble but ambitious.
Correct, and I would say that's what I see with most entrepreneurs, is that they have this humility to ask questions, to learn. They're very fast-paced. They aren't scared of making mistakes. So I would agree with that.
And can you share your journey in the venture capital industry a little bit more?
Yeah, so I've been in the industry, as I said, since 2012. So that's 12 years now. And I started in the industry at a time where I didn't fit the classic profile. So in the London ecosystem, if you wanted to work in venture capital, you typically had to do 2 years in consulting or tech M&A or have been an operator before. And I hadn't done any of those things. Actually, prior to becoming a VC, I was in wealth management. And I was lucky enough to meet entrepreneurs at the end of their entrepreneurial journey, when they'd actually exited their companies, and hear about the journey to get there. I got something in my inbox which was around a program called the New Entrepreneurs Foundation, and it was taking 30 young people who had an interest in entrepreneurship and the digital world at that time, and putting them with entrepreneurs that were building fast-paced companies. And I became an entrepreneur in residence at one such company called TalkTalk PLC, where I worked with the C-level, actually, which was really unusual to do in your 20s. I was going to board meetings. I was able then to meet entrepreneurs, and the entrepreneur that started that, which is Sir Charles Dunstone, whose previous company was the Carphone Warehouse, which was selling mobile phones. And after that year of working at TalkTalk PLC, I then started interviewing with different venture capital funds, because one of the non-exec directors at TalkTalk PLC was Brent Hoberman, and he was also a GP at Prey Founders Capital. And so I interviewed at Prey Founders, and I was very lucky that Sean and Rogan, the partners there, took a risk actually and did something very different from the industry. They were hiring differently, and they hired me. And I was able to then start there. And I went to Berlin and worked for one of our portfolio companies, Get Your Guide. And this was really interesting. My entry into venture is that I was also operative. I went into the portfolio companies maybe for a week or 2 weeks and got involved, understanding how these founders were building their teams, doing hiring, how they were thinking about cohort analysis. And that side really excited me as well, right? So I got to see both sides of the table. And then in Berlin, I worked for another entrepreneur. I think this is something that has been a tendency in my career, is to work with very successful entrepreneurs. And this was Michael Behm. He was one of the first employees of StudiVZ, which was the German Facebook. And he said, alongside his partner Samuli Siren and Thomas Baum, they were building Redstone, which was a new model of VC. And I was one of the first employees there. And that organization is now 36 employees across 6 countries and is past the 10-year mark now. And in 2017, I decided that I didn't want to continue the journey with this organization. And I wanted to stay in kind of a smaller fund and work in B2B. And that's when, at the age of 32, I was hired to run a €100 million fund as the solo kind of operative managing director of this fund. And I founded Signals VC, and we were investing in B2B focused technologies, €1 to €5 million, mainly for mid-cap and enterprise technologies. And that was also a really interesting learning for me, to understand how you can start that type of fund. I missed the whole valuation craze of 2020 to 2022 because I was doing mainly fund advisory then. And now with Altitude, I was lucky enough to find 2 partners, Mark Penkala, who's based in Berlin, and Ingo Drexler, who's based in Zurich, to build a fund where we think there's a real gap in the B2B market.
Why did you decide to invest in B2B technology?
It's interesting. So when I started in venture, most funds were doing consumer tech, consumer funds. And when I moved to Berlin, we had Rocket Internet, which you might be familiar with or you might not. It's a company builder. And most of the technologies that came out of it were B2C focused technologies. So Delivery Hero, which is doing delivery of restaurant meals. You have Zalando, which is a clothing marketplace. So mainly consumer things. And it just so happened that when we joined Redstone, most of our LPs were corporates. And corporates have always been interested in B2B because that's their bread and butter of what they do in terms of innovation. They like to know what's happening in the enterprise, in the B2B segment. And so I ended up and started working in B2B. And that's why I've been investing in that space for over 10 years now.
And on the investment side, which criteria do you consider to invest in a startup?
And I would say the answer to your question depends on the stage that you're investing. So when you're a pre-seed or really early stage company, you don't have much data, actually. And more often than not, companies will pivot. Founders will find their product market fit somewhere. And so what I think is the most important thing at that stage is really the team, is the co-founding team, and also the market. Where are they trying to invest? So if the market's not attractive, you can pivot as much as you want, but you're not going to find that scalable business model. And if the team's not great, you're not going to be able to really build for that market. So I would say that's the most important thing very early on. And then as you get into kind of late seed, Series A, Series B and onwards, then it really becomes about the KPIs of the business. And whether you're able to show that you have a repeatable sales process, whether you're able to show that you can really scale in the true sense, that the margins will improve over time, that you can reduce the customer acquisition costs. And that's what we look at more kind of late stage, and we help our founders, because we're a pre-seed seed fund, we help our founders to really understand what does the next step look like, right? Because when we invest in a company, typically they'll have like 12 to 18 months of runway. And so that's really important for us.
So in some way, when it's early, you prioritize the team over the idea, and then in the late stage is more about the business model?
Yeah, because the idea, more often than not, and you can go out and look at the data on this, it will change.
Yeah.
So the idea is important to a certain degree, and especially when we come in as investors, we want to see that there is some traction already with customers, because we're not going to necessarily invest completely on a PowerPoint. There are some programs, accelerator programs, that will invest just in the team and not in an idea, and hope that the founders will find an idea. But the type of investors we are, we hope that they already have a semblance of an idea and some customers.
What is your approach to risk management when making investment decisions?
I think that venture capital as an asset class is risky by nature.
Yes.
And there's even more risk very early stage, right? Where you only have a team, you only have an idea. But there are certain things that you can look for that have, in my experience, deemed some teams better than others in building. And those things are the founder just intrinsically knows that problem inside out. The second is, if they've seen scaling in an organization, that can be really helpful, because if you know what to expect, you know what to build and what behaviors to replicate. I think the other thing that's really useful is just understanding that you're okay with experimentation. So the best founders are the ones that experiment, learn very quickly, and then come to a very quick solution. So I think that there is risk in this asset class, but the way we manage it is through very strong kind of due diligence in the team. More often than not, one of the reasons why companies fail is that the co-founders fall apart. It's not even because of the investment, it's just the team didn't stay together. So one of the questions we like to ask to mitigate that is, have you actually worked together previously? Because if you haven't worked together and you just know somebody, it's not always the same understanding of kind of how the other person behaves, how they react. So for us, it's really important to get a real understanding. What's the team's motivation? Why are they building this? It's okay if they want to make money. Sometimes entrepreneurs just want to make money, but understanding that from day one really helps to coach and give kind of assistance to founders.
So in some ways, startups and marriages go hand in hand. So
they do. Startups and marriages go hand in hand. And funnily enough, yesterday an investor gave me the statistic that most founder VC relationships last much longer than the average marriage. So yes, I would say that there's lots of parallels.
So you really need to make sure you're marrying the right person.
Correct. And it is a long-term journey, right? You are getting, so to speak, metaphorically in bed with your VC, and you're getting to build that company together. And I think founders, especially nowadays, they take their time in choosing their VC, choosing the right partner that will take them on that journey. I personally believe having the right people around you can change the course of your life, so personally, but also business.
I think you've already mentioned a little about this, but what are the most important characteristics in a team?
I think having shared values is really important, and that goes beyond, and I think that's the same in a marriage, having really shared values, because more often than not, let's use the analogy of a marriage, your partner might change. They might look different over time. You might have different jobs over your marriage, right? And if you look at just the superficial things at the beginning, that's a relationship that will not stand the test of time. So I think having really shared values, understanding how do you want to work? Some people like to work 24/7. Other people don't want to work on the weekends. And there's two schools of thought on building companies. Some people say you have to build your business 24/7. And other people say, well, you can have a life as well. So just understanding how does everyone want to work, understanding what motivates everyone to do certain things. And also, and I think this is the most important thing, is how do you deal with conflict? So when things go wrong, it's the same in a relationship. It doesn't have to be a marriage, but any type of relationship. When something goes wrong, how does the other person react? What do they do? And can you be past that and beyond that is something really important.
So it's kind of like matching the level of dedication that you're putting.
Correct. And the style, and just working in harmony with each other to build. Because there's enough complexity in what you're trying to build externally that you don't need it in the team.
Which sectors do you actually think that are undervalued and have potential for growth?
So I think what's really interesting right now is kind of the energy segment. I think that's really interesting. I think manufacturing, especially in Germany, there's a lot of movement there. I think that sectors that have traditionally been very highly regulated have huge opportunities for improvement. And I also think sectors that are public goods, so education, healthcare, have huge opportunity as well.
And how do you see the role of technology evolving in venture capital investments over the next decade?
That's a great question, just given generative AI and AI in general that's come out. I think investing is very human. So especially in the early stage, you don't have much data to use. So using an AI to work out if a company should be invested in or not, I don't think that really works. I think that might be the case when you're looking kind of at growth or private equity type investments, where you have lots more data. You could use something like artificial intelligence to work out, at least from a forecasting perspective, if something makes a lot of sense or not. I think the venture market is in flux right now. I think over the last couple of years, you had way too much money in the market. I think there's going to be consolidation of funds. So we're going to see maybe fewer funds in the market. I think you're going to have fragmentation in the very early stages, so way more specialist funds like our own. And I think you're going to have, and I think this is way, way more important, a lot more diversity in the type of people that invest in companies. I see it already. When I started in venture, I was in the UK, one of 8 women, and then in Germany, when I moved there, I was one of 3 in Berlin. So I definitely love the advancement of the diversity that's happening in the ecosystem right now, and also the different ways that people have entered the industry, not only as operators, or if they've come from an academic background, or they've built a company. I mean, the diversity is really interesting.
Because I don't know if I'm supposed to talk about this or not, but the other day we had an entrepreneur in Femtech, and she actually said that she struggled explaining her idea to a male-dominated VC industry. So that was one of the challenges that she had while getting funds. So I think like having more diversity in this way would have allowed her to explain herself better, and for investors to put themselves in their feet and actually think like, oh, I need this. Like I feel I know what you're talking about. I know that you're frustrated about this. Me too.
Yeah, no, I think that's one thing that's going to be really good for entrepreneurs that are building solutions and identifying problems is sometimes you sit in front of a group of people, and venture funds are relatively small. They're not that big. And if someone hasn't experienced that problem, more often than not, they're not going to be able to relate unless you are later stage. So say this femtech entrepreneur had gone out and already had traction in the market, then she'd be much more able to say, okay, this is a huge problem. Whereas when you're very early stage, that's more difficult to do. So I could see where that would be really important.
So what advice would you give to aspiring women who want to work in venture capital?
I think that this is advice that I would say to anyone wanting to work in venture capital is if you're interested in technology, you should write about your opinions, you should share your opinions, you should have a seat at the table, and like anything that you have a passion for, you should go and seek out mentors and people that are interesting and that may further what you're doing. So I think that often I see this, women can be quite reserved. We can not be out there putting our thoughts on the table. And I think that one of the good things that I would say to any woman out there that wants to do entrepreneurship or work in technology is to have an opinion, right? Being a VC is a lot about having an opinion on markets, on trends, on technology. And so develop that opinion and have it and stand behind it.
Thank you very much. Okay, now we're going to go to the other section of the podcast, which is called Entrepreneurs Inbox, in which we receive questions from students and listeners that are interested in this topic. So what is your favorite phase to invest when looking in a startup?
My favorite phase is actually the phase that we're investing in Altitude, so really the pre-seed. It's where there's the most movement. It's where everything is not set in stone. And for me, that development and pace is really exciting.
That's when your entrepreneurial spirit comes out. Right?
Yeah, exactly.
Is there something like a book, a podcast, a mentor, any tool that significantly influenced your approach to venture capital?
I read a book, and it's actually not anything to do with venture capital at all, but I read it in the beginning of my career, and it's something called Give or Take by Adam Grant, and it's about relationships and how you build relationships. And what I've realized is that everything in life, whether you're an entrepreneur or whether you're trying to build your personal life, it's all about the people that you come across. And Give or Take is really about this ideology of how you build relationships. And that for me has been key. And I would recommend that book to anyone.
And the last question is, outside of work, what hobbies or activities do you like to do that influence your approach to business?
I actually decided to take up tennis with my husband, actually. And one of the things about playing tennis is you're always trying to anticipate where the ball is, and you're always focused on what is happening on that court. You've got no real way to have distractions because it's such a fast-paced game. And I think focus is really key in all facets of life. And so for me, that's what it brings me, is a lot more focus in the work that I'm doing.
So sports actually help a lot.
Sports help. I think I also like being out in nature a lot. So I like hikes, I like being in the mountains. And I think there's something to be said for that kind of tranquility. Yeah.
Thank you so much for being here. Thank you so much for all of your insights. Like, I believe we all learned a lot about the venture capital industry and a little bit more about what's inside of an investor's mind when investing. So don't forget to subscribe. We are available in all platforms. Thank you.
Thank you very much for moderating this. I would like to tell everyone that if you want to do something, just do it. A lot of people sit there and think about doing something, but taking that step of just going out and doing it is really important. And I've been lucky enough to take a lot of calculated risks in my life. And I would tell any budding entrepreneur, VC, anyone, that if you want that future for yourself, go out and do it.